British Columbia's real estate market has always been a fascinating mix of sky-high ambition and grounded reality. From the luxury towers of Vancouver to the lakeside homes of the Okanagan, BC has long been seen as the jewel of Canadian property. But as 2025 unfolds, the story is shifting. Buyers, sellers, and investors are finding themselves in a market that is no longer red-hot, yet far from ice-cold. Rising inventories, softening prices in big cities, and resilient demand in smaller regions are painting a picture that is more complex than headlines alone suggest. So, where exactly does the BC market stand today, and what does it mean for you? Let's dive deep into the conditions shaping one of Canada's most dynamic housing landscapes. A cooling market province-wide. The first thing to note is that British Columbia, as a whole, is no longer in the feverish boom we witnessed a few years ago. Home sales are down significantly from pandemic highs, and inventories have surged to levels not seen in over a decade. By mid-2025, active listings had surpassed $48,000, marking a sharp contrast to the tight supply that once defined the province's housing market. Sales themselves are also cooling. June 2025 recorded just over 7,400 transactions across BC, down more than 8% year over year. Prices, while not collapsing, have inched lower. The average benchmark home price slipped about 1.3% year over year to sit near CAD 953 to 500. For many homeowners, this signals a plateau. For potential buyers, however, it finally looks like an opportunity to enter the market after years of being priced out. But this provincial snapshot doesn't tell the whole story. Different regions in BC are experiencing very different realities. Vancouver, a buyer's market. Emerges Greater Vancouver, long the symbol of unaffordability, is now showing the clearest signs of softening. For 5 straight months in early to mid-2025, sales activity has declined. Inventories, meanwhile, have ballooned, up 25% year over year in May alone. This has pushed the months of inventory to around 7.7, tipping the scales firmly in favor of buyers. Prices are reacting accordingly. The MLSR Home Price Index fell 1.5% in April 2025, the sharpest drop since mid-2022. Detached homes have borne the brunt of this decline, while condos and townhouses have fared somewhat better. Yet even in the condominium segment, the surge of new supply and slower absorption rates are cooling the frenzy. What's interesting, however, is that Vancouver's downturn is not purely a negative story. For years, buyers have been waiting for breathing room, and now first-time buyers and families are seeing opportunities that didn't exist before. With interest rates expected to gradually ease in 2026, the current lull may set the stage for renewed activity down the road. Fraser Valley, prices slide, opportunities rise. Just outside Vancouver, the Fraser Valley market, including cities like Surrey, Langley, and Abbotsford, is also experiencing a correction. Prices dropped about 4% in June 2025, with detached homes leading the decline at 4.6%. Townhomes and apartments followed closely at 3.1% and 4.5% respectively. This may sound discouraging to sellers, but it represents something crucial: balance. For years, Fraser Valley was one of the fastest-growing regions, fueled by migration out of Vancouver and demand for more affordable options. Now, with increased inventory, buyers have more choice and negotiating power. Investors are also keeping an eye on this region, as soft prices may open the door for strategic purchases ahead of the next cycle of growth. Victoria, a pocket of stability. While much of BC faces headwinds, Victoria is proving resilient. Sales in the capital region are up modestly, around 1.8% in 2025, and prices have risen 1.7%. Why the difference? Part of the answer lies in limited land availability and high local demand. Victoria's appeal as both a retirement destination and a hub for government jobs provides a buffer against the volatility seen elsewhere. Additionally, the rental market in Victoria remains incredibly tight, pushing more residents to consider homeownership even amid higher borrowing costs. For sellers, this has created a more balanced market, where homes still move relatively quickly if priced right. The Okanagan and Interior mixed signals. The Okanagan region, with its lifestyle appeal and recreational properties, offers a mixed but intriguing picture. In July 2025, some subregions posted notable gains. Shuswap saw a 20% jump in sales, while Central Okanagan rose 8.2%. Prices also edged higher in Central and North Okanagan, though the South Okanagan dipped about 2%. This divergence shows the importance of local dynamics. Areas with strong amenities, tourism, and proximity to Kelowna are faring better, while more remote regions are experiencing softer demand. Investors looking for long-term vacation rental or retirement property potential are still active, ensuring the Okanagan remains one of the province's most attractive mid-tier markets. Smaller communities, steady and sometimes strong. Beyond the headline markets of Vancouver, Fraser Valley, and Victoria, many smaller BC communities are showing surprising resilience. Cities like Prince George and Kamloops, for example, are balancing out thanks to stable local economies, more affordable housing, and renewed interest from buyers priced out of coastal hubs. In northern BC, even luxury and niche properties are making waves. A handcrafted wooden castle resort in Terrace, for instance, hit the market for $16.5 million, highlighting the diverse opportunities that still exist in less traditional regions of the province. Policy shifts driving market dynamics. No discussion of BC real estate is complete without acknowledging the major policy changes shaping supply and demand. Premier David Eby's government has rolled out aggressive housing reforms, including eliminating parking minimums to lower building costs, banning most short-term rentals to free up long-term housing, offering tax exemptions for first-time buyers on properties under $500,000, supporting density through zoning reforms. At the federal level, the 100% GST rebate on new rental construction, coupled with BC's removal of provincial sales tax on such projects, is expected to significantly boost purpose-built rental supply. Over time, these changes may shift pressure away from ownership markets and stabilize affordability. The road ahead, 2026 and beyond. And looking forward, forecasts suggest BC's real estate market will see a modest rebound in 2026. Sales are projected to rise by around 10.7% after 2025's slump, while prices are expected to recover by 3 to 4% depending on the region. This outlook is underpinned by expectations of interest rate cuts, steady population growth, and ongoing policy-driven housing construction. For now, though, the theme is transition. Buyers are gaining leverage, sellers are adjusting expectations, and investors are weighing short-term risks against long-term potential. British Columbia's housing market is no longer the runaway train it once was, but that doesn't mean the ride is over. Instead, we're watching a landscape in flux, where opportunities and risks coexist in every corner of the province. From Vancouver's cooling towers to Victoria's steady harbor and the Okanagan's evolving valleys, BC real estate is rewriting its story in real time. So what do you think? Is this the perfect moment for buyers to step in, or just a pause before the next big surge? Would you take advantage of the cooling prices, or wait for interest rates to drop further? Share your thoughts, because the next chapter in BC's real estate market might just be written by people like you.